Well, hi there. Welcome to Markets Tomorrow right here on ET now, the Mumbai News Centre. I'm Tanveer Gill. And what a day it was really for the markets. The start of the trading week was very encouraging. And, drilling it down to specifics, it was really about financials today for the market to close at the day's high. So a good session in trade from all quarters. Advanced decline ratio looked healthy in the favour of advancing stocks. The Bank Nifty closed up 2.5% higher. That's where leadership came from for the index. So remains to be seen whether we could be continuing with this trend for the remainder of the week and could be talking 8,000 once again on the index. It seems like on the futures and options side that there was good base building around the 7,800 mark in this session. So voices lined up on the show that'll make sense of the markets for the benefit of our viewers. You have Vikas Khemani of Edelweiss Securities, Harendra Kumar of Elara Capital. Shrikant Chauhan will help our viewers through trading ideas for tomorrow's session, and Mayuresh Joshi will help our viewers with investment calls that his brokerage is making at this point. The top stories of the session, it was really about the index, like I said, rallying about 1.5% higher, reclaiming 7850, which was encouraging. The trigger really was a global rally, a relief rally, so to speak, a comeback for stocks across world markets on the expectation that the Fed would not hike rates for the second time in June, as was broadly the hope, with the non-farm payrolls data looking not so promising in its last reading on Friday. Those hopes seem to be getting revised, and the accommodative stance and support from the central bank in the U.S. is likely to continue, which is fueling a bit of a rebound for markets. In our market, it was really about banks, whether it's financials, the NBFCs, private banks, PSU banks, large caps, mid caps, small caps, all of them rallied in the session, which was fairly important. You also had 7,800 seeing the maximum build-up in open interest on the 7,800 puts, suggesting that there was strong support building around that mark, base building, like I said. In terms of individual movers, it was really about CLSA sounding upbeat on Reliance Industries, expecting the Reliance Jio rollout to work wonders for the business, which kept the stock in focus. HUL Q4 sales looked, they missed expectations, but margin expansion was encouraging. The sore point was sluggish volumes, which is what translated into a miss on the sales front. And this was the weakest volume growth that the company witnessed in the last 5 quarters. So something that was largely attributed to a lack in the rural demand growth, and that the management expects could change after a healthy monsoon season. So in Q2, Zee Entertainment rallied ahead of earnings, which was encouraging. It was among the top index gainers in the session today. The question then we are asking is that, will today's Nifty rally above 7850 sustain? And Mayuresh, good evening to you. Do you think so?
Evening, Tanveer. The bounce back that we've seen in the Indian markets are a combination of 2 factors: what has happened with the global markets and expectations of earnings recovery happening much sooner than what the market really expects in the second half of this fiscal. Having said that, the first half of the earnings season has been quite reasonable, with private sector banks posting decent growth, large cap IT posting decent growth. But the second half of the earnings season, where a whole host of PSU banks will report their numbers, capital goods stroke infrastructure will report their numbers, will keep a drag onto the consolidated earnings or the overall earnings that the market probably is looking at. So the markets are just stating a late recovery in terms of cyclicality by the second half of this fiscal, along with the capex cycle. But what would determine the market movement specifically in the short term would be how global markets react. The rebound that we're probably seeing because of the US data is a core factor why markets have rallied today. Short covering evident in today's rally, but largely I think the volatility in the markets will continue. And from a short-term perspective, my own take is that the markets will consolidate in this band of around 7,600 to 8,000 on the Nifty.
Okay, Mayuresh, I'll just come to you in a bit. I want to also address the technicals with Shrikant. Good evening, Shrikant. What's your own sense about the rally sustaining above 7850, closing at the high point of the session?
Good evening. Technically, the way the market recovered today, and it has broken almost all its important level like 7800, 7835, in fact 7850 on a closing basis. It clearly shows that we are heading for the levels of 7920, 7940 kind of levels, and based on that, yes, we can see one more pullback towards 7940 or 50 levels in maybe next 1 or 2 days of time. Today also there was broad-based activity, so chances are very bright that we are heading for 7940, 50. But it will be a very difficult task for the market to cross the level of 8,000, because still open interest at 8,000 and 7,900 is very high, and they are like still showing a lot of like outstanding positions. So I am of the view that we are into triangle formation. After hitting major low of 7670 or 7680, we are heading for the next upward level, but that level is going to remain below its previous high of 7990. So 7940 is the next target for the market.
Okay, and drilling it down to financials, Mayuresh, yes, private banks are seeing interest, financing companies are seeing interest. HDFC, that's a very strong move over the last 7 sessions come in there. Do you think that, again, you would be recommending your high conviction buys from across the sector, or relatively you think some of the low value names will also see interest? And I'm particularly talking about PSU, some of the mid-tier PSU names as well, and a cheaper stock relatively in the private banking space in an ICICI bank.
So largely, Tanveer, one really needs to now bifurcate between the financial space in the banks itself. You're looking at the retail-oriented private sector banks and the banks having the corporate and the SME exposure. So within the space itself, what has really come out of ICICI and Axis Bank's numbers and the management transcript thereafter is the kind of expected stress in terms of the exposure that they've got to the end user industries. Now, whether that stress continues or we see a cyclical recovery both in terms of credit growth and the working capital constraints for the end user industries getting over sooner than later, I think the earnings trajectory of 20% plus would continue for these banks. On the retail-oriented private sector banks, the story is rather unscathed at this point of time. And again, I think the expectations of earning growth specifically for banks like an HDFC Bank in excess of 20-odd%, the capital adequacy ratios remaining very, very strong, make it a conviction list. However, I think one really needs to understand that the valuation for a few of the banks have become a little bit too stretched. So one really needs to be stock specific within the private sector space. When it comes to the housing finance or the NBFC pack, housing finance companies again should do relatively better over the next 4 to 6 quarters. What we've seen with HDFC, and again I think the valuations of its life insurance arm, and again rough estimates peg the embedded value anywhere between 20 to 25,000 crores. The value of the subsidiaries in HDFC's market price is significantly high, and again I think that has a potential upside if the embedded value of the insurance arm, which is expected to get listed, is much higher than what the market is pegging at this point of time. In terms of asset quality, advances, the HFCs have been right there at the top, in the top tier quartile. When you're talking about the cost of funds coming down, it's actually come down quite drastically for them, which would entail that advances and earnings growth remain extremely strong. So housing finance as a space is something that we'll remain very, very optimistic about. The rural finance companies is something that one really needs to wait and watch for, because I think they've run up ahead of monsoons and expectations of monsoons being much better over the past than what we've seen in the past 2 years. So I think one really needs to take a stock-specific call when it largely comes to the rural-oriented finance companies.
Ahead of earnings, Z Entertainment, Srikanth, on the charts, is this seeming like a move that can sustain?
The stock has spent a lot of time between the range of 445, 450 on the high side, and on the downside 385, 370 always acted as a very good support for the stock. Z especially has formed a bullish reversal formation in today's date, and it closed very close to 420 levels. I am of the view that eventually the stock is going to break its upward barrier, which is close to 440, 450 levels, and after that we are going to see the levels of maybe 500 or 510 kind of levels. So even at these levels also, most of the time we have seen that profit taking has came and the stock has fallen, but this time I'm very much sure that the stock is going to cross its level. So basically the strategy should be to look for adding long positions in ZTV at current levels, more on dips, and keep a target of 500 on the high side.
Okay, we'll talk more about Z Entertainment and get a fundamental view in just a bit. Those are numbers to watch out for in tomorrow's session, but also watch out for what Goldman Sachs is saying on Just Dial. They're reiterating a sell, see 37% downside with a target of 500 on that one. Pranay joins in with a quick snapshot of that report. Pranay.
Well, the stock of Just Dial had more than doubled in 2 months from mid-Feb to April, and then had rallied a bit more after it announced customer sign-ups for its recently launched JD Omni. Goldman Sachs is now of the opinion that that rally is now behind us, and any incremental news on more customer sign-ups, for example, the last update was over 500 firms and 2,000 customers which had signed up for JD Omni, those rallies will be short-lived and the stock could be sold on those because the focus is going to be on earnings and that will be weak. According to them, Q4 revenue growth could be about 14%, which is a modest improvement compared to 11% seen in Q3. But pressure on margins will show sequentially as well as year-on-year, which have as it has been in a down spiral. So they are expecting EBITDA margins of 21% with further risk going on in the forthcoming quarters because of the full-scale launch of Search Plus as well as the ramp-up for JD Omni besides increased hiring. Not just that, the company has given a guidance of 20% revenue growth, which if you translate into numbers would require them to achieve a 6% growth every quarter for the next 4 and add 20,000 paid campaigns, which according to them looks difficult in the current environment. Also, when the stock is quoting at a valuation of 46 times current year's earnings, which is at a 44% premium to global classified players, where its earnings expectations are lower than them, they believe that all the positives are right now factored in fundamentally. Even in a bull case scenario, the stock is not expected to move up. In fact, it could again slide down to levels of about 730 in the near term. But fundamentally, they see a fair value of about 500, which is a downside of about 37% from the current level.
Okay, that's what GS is saying about Just Dial. Thanks very much, Pranay, for taking us through that report. The one that caught my attention also was Bosch, sitting at 20,000. It's not a cheap stock, but that's $1,000 move in a single session. Shrikant, very quickly, sustainable?
Yeah, here also the call is bullish because the way the stock recovered from lows and the way it corrected in last 6 months, I'm of the view that it is again following to the pattern of Eicher Motor, and I'm of the view that it is again heading for its previous high. So currently the stock is definitely into some sideways consolidation, but over the period we are going to see some more activity and more bullishness. At current levels, I think one should definitely look for adding this stock at current levels, but we cannot keep a short-term view. So if there is a medium-term view, then certainly one can look for adding even at current levels Bosch Limited.
Okay, the big earnings today was HUL, and would you see the story as one of margin expansion hogging the limelight, or sluggish volume growth, which the management attributed to weakness in rural demand, and perhaps expects that with a healthy monsoon that number could change come Q2? That question is for you, Mayuresh.
No, Tanveer, I think both factors are at play when it comes to Hindustan Unilever. Because of the input cost deflation, what we've witnessed over the past so many quarters, the implied benefits are coming onto the gross margins and the operating margins as well. However, with the kind of volume growth that we've seen, one really expects the rural demand probably to start inching up if the monsoons are much better than what really one expects. So if the monsoons are really better than what really one expects, I think the volume growth can be quite substantial for most FMCG companies. And that again will have a telling effect specifically in terms of HUL's soaps and detergents segment, which has been lagging because of the price deflation that we've probably seen and the input cost deflation. However, I think the personal product segment did not fare up to expectations in my opinion this quarter round, but it's got huge potential as well with the key marquee products that it's got across segments, whether it's soaps and detergents, personal products, oral care. What really happens with the monsoons is going to be a key determining trend going forward. But again, I think these factors would only be watched out over the next couple of quarters on how monsoon progresses. And again, valuations have always been a headwind to HUL. Even now they're trading at around 41 odd times FY 17 numbers, which by no means is cheap. So I think competition, what happens with monsoons and within the individual segments itself, I think significant contribution from soaps and detergents and personal products is going to be a key determining factor for HUL in the quarters to come.
Gentlemen, stay on with us. We'll head into a break. As we do so, hear out some market opinion we got on the channel today through the rally.
Clearly, I think international markets have settled down. Domestically, things are moving forward. We've started seeing green shoots on the economy picking up. I think in terms of volume-led growth has started to see uptick. If you look at earnings, private sector banks, wherever the corporate exposures have been limited, earning growth as well as credit growth has been fairly robust. I mean, that clearly shows that there is a latent demand. Banks are growing, but wherever there are issues around asset quality, I think banks are kind of coming out of it and resolving. But it appears that their also worst is kind of behind. Last couple of years we've been seeing good amount of stress on the rural focused NBFCs, and I think post monsoon sort of forecast, some sort of worries have started receding on that. That probably worst is behind for them.
On NBFCs and certain private banks, I think the commentary has been extremely positive, and that is what is getting reflected. One has to remember that clearly these numbers are pricing in today's, but the optimism of tomorrow, we believe that the earnings cycle will resume very strongly and sell side will be behind the curve. The earnings have been actually quite positive, and my guess is that the earnings surprises to the downgrades have been on the higher side, which is what is helping the market to hold up.
Key earnings to watch out for. Let's focus on Zee Entertainment that we just highlighted. It was a good move on the stock in the session today. As you can see, almost 4% higher on above average volume. So this one closing at the day's high, just like the market, among the top 5 gainers, that is. And Avan joins in with a quick run through on what to expect from the numbers. If you are to go by with that expectation of 24% on margins, which is a 400 basis points expansion year on year, that's a good beat in earnings to go by with, Avan.
Well, we certainly have seen a fairly healthy rise in Zee Entertainment today prior to its numbers, but expectations are fairly strong. First up, we're expecting the profit at about 282 crores. That's higher by almost 22%, and it's likely to trail the EBITDA growth on account of the normalized tax provisions in the fourth quarter. Sales growth is seen healthy, higher by about 12% at around 1,510 crore rupees, and we're expecting the margins to increase sharply to about 24.2% versus 20%, which means a growth of something like 35% in the overall EBITDA at 366 crores. Now, that's largely going to be driven by the base effect, the absence of the AND-TV launch costs and expenses, as well as the market share gains that we've seen for their regional channels. A very important component is going to be the ad revenue growth, which is seen at a healthy 24%, and that's largely on account of the full quarter impact of AND-TV, the improvement in the regional market share, as well as the strong TV ad spend environment and the Zee Cine Awards contribution. Subdued subscription revenue growth about 7% higher at around 546 crore rupees, as the domestic subscription is yet to fully gain momentum, and we're expecting the sports business to report an EBITDA loss of about 150 odd crores due to the WWE event in Delhi, as well as the T20 series that took place in South Africa.
Okay, thanks, Avan, for that. That's going to be an important one to watch out for. And I know we've touched upon the technicals here, Mayuresh, but among fundamentals, they actually come out with that startling a performance at the operating level, which is a 400 basis points expansion in operating profit margins. Is that a case to book profits because the stock has seen a decent rally ahead of numbers?
Tanveer, again, it's largely a matter of perspective. And if you look at the base quarter of the last financial year, it was AND-TV which had got launched, and that effect is clearly going to play out on the operating margins for Zee. Now, the determining factor for Zee going ahead will be how sustainable will be the ad growth. And again, largely for this quarter, as Avan was mentioning, the ad growth is expected to be pretty strong, around the 24-25 odd % mark. But going forward, clearly, I think with the curtailment of sports losses, with expectations of subscription revenues increasing at a very healthy pace with digitalization picking up steam, my own take is that the earnings story for Zee would continue over the next 2 to 3 years. Yes, I think there would be intermittent content cost inflation coming through as the contracts start expiring. But again, I think the markets will largely factor that with compression in margins getting offsetted by higher yields on the ad revenue component. So as a story, I think it's a well laid out story over the next 2 to 3 years. But I think the numbers would be key. I think strong expectations of numbers tomorrow. I think if they disappoint, the stock might actually correct, because I think the stock has overstretched both in terms of valuations at the current juncture from an FY16 perspective as well as the price movement. So I think numbers keenly watched out for and management commentary. But I think as a story, I remain extremely optimistic on Zee with a 2 to 3 year perspective, and a disclaimer, I think we might be holding the stock in our VMS funds.
Okay, that's a quick view coming in on Z Entertainment once again, and this is going to be a set of numbers that perhaps the market would be expecting a lot from in tomorrow's session. We'll have to wait and watch out to see whether the numbers actually play out as per those estimates. Muthoot Finance, what a move on that stock, not just for today's session, but we bring up the 7-day chart as well. 12% higher, good to go for more, Srikanth?
Yeah, it looks like the way there is activity in all NBFCs, we are of the view that almost all stocks are going to do well because it's a broad-based activity, and it's not only broad-based activity, but there is a price as well as volume-based activity. So it's a completely top-down approach, and a lot of stocks are like doing well. But we specifically more bullish on SKS Micro and Manappuram Finance, which is quoting at 40 and 620 kind of levels. There we have a bullish call, and we are of the view that Manappuram Finance is the next stock to watch for, because the way the technical is shaping up, I think after consolidating or taking like some more time around these 40 levels, the next level to watch out for is between 60-65. So from here also we can expect 50% kind of return in next few months of time. So it is better to keep focus and to invest or to trade in Manappuram Finance at current levels.
Okay, let's get in strategies then before close. Mayuresh, your top investment idea at this hour?
Now again, if you have a perspective of more than a couple of years, CRM Silk Mills is something that I'll continue to like. What you've seen in the company in terms of growth, specifically from the fabric segment, has been quite exponential over the past so many quarters. And our own take is that the earnings momentum specifically towards this segment of the business should continue doing well. Secondly, in terms of the distribution reach, the management is clearly focused on increasing both their own stores as well as stores through the franchisee route, and that probably will increase the length and breadth in terms of distribution of its products, whether that be shirtings, suitings, and again the ad spends that they're probably doing are a testimony to the fact that the brand recognition is happening at the right places. They are foraying into women's ethnic wear, and that's a huge market again, and if that picks up steam, my own take is consolidated numbers over the next 2 to 3 years should appear far better. Even in terms of valuations at the current juncture, my own take is that the stock is reasonably priced even from an FY17 perspective. So anybody having a view of more than 2 years, CRM Silk is one stock that I'll remain extremely optimistic about.
Okay, and very quickly, Srikanth, your investment strategies, your trading ideas for tomorrow.
I think from here the Nifty is going to give us some 70-80 points max, and we are expecting market to remain in a range. So I'm of the view that we should look for adding those stocks which are not part of index. We like United Spirits, McDowell, which is currently trading at 2600 levels. There we are of the view that it is into impulse trending mode, and it is heading for the levels of 2850 or 2900 in next couple of weeks. But at least in the near term, we can see the levels of 2800 on the higher side, and that is why we are of the view that we should look for adding this stock, McDowell's United Spirits, at current levels, with a final stop loss at 2500, and we can keep a target of 2800 on the higher side. The other stock which we like is Bharat Earthmover, and here also the view is that the stock has fallen, and the stock has almost tested its previous lows of 850, 820 kind of levels. But today, the way the stock recovered from lows, I am of the view that again it is entering for the next up move in the near term, and in that we can even see the levels of maybe 1000 plus. But at least in the near term, in next 1 or 2 days of time, we can see the levels of 970 or 980 on the higher side. Currently the stock is at 920 or 915 kind of level. So with a stop loss at 880 or 885, we can take long position in Bharat Earthmover at current levels, and we can keep a target of 970.
Thanks both of you for joining us with your views on the markets and your insights as well. That's time out on markets tomorrow. We'll catch you with the markets as always. Our market coverage begins at 8 a.m. So tomorrow morning, that's when you have an appointment with us. For now, thanks very much for watching.